Good morning and welcome to another week of Subject to Finance. It's Monday the 21st and I'm going to look back at what's been going on this week. For those of you that are new to this channel, what I'm trying to do here is to give agents some tools to actually be able to have really good conversations with vendors and buyers around some of those elements of finance that you need to be able to talk about, and just to keep you up with what's going on in terms of banks, things like Reserve Bank announcements, which we'll talk about this week, and where you can find tools to help you or to point a vendor or a buyer in the direction of to help them actually sort out their finance. So this week I'm going to talk a little bit about OCR, foreign buyers, what's going on with the banks, and just a few observations from the first home buyer side of things. But before I get into that, because we've always got new people joining the channel, I just want to kind of do a bit of a shout out to Tella and its website and what we're trying to do there. So for those of you that are looking for a resource in terms of understanding the home loan side of things, there's some great learning materials on that website. So if you go onto Tella and look at Learn, you'll find a heap of different stuff that's relevant to first home buyers, to those that are refinancing, to those that are investing, and it's a great little resource, so just a reminder there. And also we've got some great calculators there, so if your client's trying to work out their borrowing power, what they can afford, what payments are going to look like, how they could go about building their deposit, then there's some awesome calculators there for them as well. So getting into the week that was, I'm going to start with the OCR. Obviously most of you will have heard that there was no change, and I think that's a positive thing for all of us. I just want to go through some of the key points that Adrian Orr mentioned when he was running through the reason for the no change, because some of these things actually give a better clue as to why no change, but also what we could expect in the future. He talked about staying at a restrictive level for the foreseeable future. So in other words, where we're sitting at the moment is likely to stay similar for a longer time, and I think I talked about that when we talked about interest rates a couple of weeks back, but he's reinforcing that now, saying that that the OCR is going to be at that restrictive level for longer. You know, he's not at this stage talking about an increase, but as you will have heard me talk about in my prior video, there is still indication from the banks that they half expect to see another, say, 25 basis points pre-Christmas, just to fire a shot across the bow of Christmas spending. In other words, to keep it down, to keep it low, to try and hold back that inflationary stuff. But he did point out that activity's slowing, labour shortages are easing, headline inflation is declining. I think from a global point of view, this is a trend that's been seen across the board, and actually there's some real downward pressure out there at the moment in places like China. That's driving commodity prices down. That's kind of a deflationary thing. It's not great for our export sectors in terms of dairy and meat, but it's recessionary type of activity. But we still require, and this is his words, a long period of subdued spending, and that's where I guess the banks are coming back to. We could potentially, if spending's creeping up too much pre-Christmas, we could potentially see the Reserve Bank call for another 25 basis point lift in terms of the OCR. It's that core inflation, our domestic or local inflation, that's still the problem. And that really means hitting people in their back pockets. And so that's what we're going to expect to see in terms of control going forward, is Reserve Bank looking at those spending numbers and sort of making sure that we're not overindulgent in terms of the way we do life over the next 6 to 12 months. Banks aren't really responding to OCR, and I think I talked about this again a couple of weeks back, but it's unlikely that they are going to. They're really looking at cost of funding. That's their external cost of funding, which is more global in terms of effect, if you like, but also their own internal deposit taking. And I think what we can see there in terms of the deposit side of things is that the banks are in quite a competitive space at the moment when it comes to deposit taking, and so the cost of their deposit activity, the term deposits, the call accounts and all those things that are earning interest are going up. and reflecting that competition. And I think that's really what's going to drive our home loan interest rates over the next 12 months is just the competition in the deposit markets and their cost of funding offshore. So it's really not going to be driven too much, I think, off the back of OCR changes. So expect to see interest rates on home loans bouncing around for some time to come as they just adjust their books around their actual core funding. A couple of other things that have interested me this week, and I don't usually talk about politics on this show, but there was an interesting little note around foreign buyers coming out of the national camp, indicating that there will be some announcement pre the election around the treatment of foreign buyers. As you'll all know as agents, that changed substantially under this current Labor government, with a focus on kind of getting that New Zealand demographic into homes and not risking the competition from foreign buyers, and therefore they made it very hard for foreign buyers, unless you're Singaporean or Australian, to actually even buy a house here. And there's sort of an indication at the moment that National may look at reviewing that going forward at some point. No announcements yet, but they've indicated that there could be one coming. So we'll watch that space. We're definitely seeing an increase in offshore buyers, and that's sort of limited to Australian and Singaporean. And I think it really comes off the back of New Zealand home builders marketing in those two markets at the moment, and trying to find alternatives to our local activity being low. Banks this week, not a lot going on, but BNZ and actually a couple of others are sort of taking a lighter review when they're reviewing statements for borrowers when it comes to those lifestyle expenses, the discretionary expenses, if you like, and putting a bit more focus on the fixed expenses, the key things that you need to live, which is your power, water rates, education, food, the stuff that you can't do without. So yeah, just a little bit of a tweak in the way, particularly BNZ, but I think we're starting to see this across the board, the way banks are looking at the analytics of your spending as a borrower. We're also seeing BNZ being very competitive in the 2-year rate. We're seeing a couple of the banks with their 1-year rates back under that 7% mark at the sort of 695, 699, which is interesting. So 1-year rates coming back a little bit. In terms of other things, first-home buyers, it's been really interesting the last couple of weeks. We've definitely seen them finding things more competitive and a bit of FOMO creeping back in. So it'll be interesting to hear what you're seeing as an industry. So as agents, if you've got anything in terms of insights there, I'd love to hear more. You can send those through to hello@tella.co.nz, or you can post comments on our YouTube channel, Subject to Finance, or contact me in any other way. I'm on the website andrew@tella.co.nz. Love to hear more from you. Have a great week ahead. Hope the sales over the weekend have been good. Cheers. See ya.